Hello everybody, Jackson here with the Wealth Squad today, talking about Verizon stock, mainly because it's been on a downfall for the past year or so, or the past 8 months. We can check out the year, around 8 months. The stock has been falling down from the 50s to now the high 30s. We could zoom out, all-time high was back in 1999. Or, I mean, you can see it's around the same price as 2020, but adjusting for dividends tells us a different story. So adjusting for dividends, this price back in 1999 was $21, and the very top is $55, which in fact, it was 62. But adjusting for dividends, now the stock price is the same, of course. That doesn't change the fact, it just changed the fact of the past stock performance. So over the past, we could go all-time chart since 1983. Stock has done relatively very well from $1.30 to $40, right? We can see that right here. So up 3,000%, but that is that's a long time. That's around 40 years. So more realistically, we could go 5 years. What has the stock done in 5 years? It's gone up 6% accounting for dividends. Not accounting for dividends, you talk about a decline. So that's why we're talking about Verizon today. The stock is not doing so hot. But what about the company, right? That's the question we have to ask ourselves. And that's why potentially we might want to invest in some Verizon. But regardless, if you don't know, Verizon has a very nice dividend yield, 65 cents in the latest quarter, usually 64, so they bump that up even when times are tough. So they're looking at $2.30 a year, and that is their yield. And we could actually see the yield 6.89%. So the yield is 6.9%, but the payout is around, what did I say, 64 times 4, or 0.64 times 4. You talk about $22.50 a year per share. So imagine this: you have 100 shares, you're making $250 a year, just when it's $3,800 investment, right? $250 a year, almost guaranteed, unless Verizon goes under. Plus, you get that chance of appreciation. So besides just that nice and lovely dividend, we gotta look at, is this company even worth investing in? For that, I'm looking at macrotrends.net. We're looking at the EBITDA of Verizon from 2010 to 2022 has gone in the right direction. You can see making $47 billion a year. Shares outstanding, well, in a general stock pick, we'd like to see the shares outstanding going down, which means they're buying back the stock, they're not issuing any more stock, and they haven't since 2014 or so. I mean, you can see barely an increase. So not so much in the right direction. We'd like to see shares outstanding going down. Revenue, as going in the right way, right direction. You can see within the latest year, up 4%. It's probably just going back to the quarter. So yeah, it's trailing 12 months, quarterly up 4%. Pretty nice gain, but overall, it follows the general stock market. You can actually see in 2016 going down, 2020, of course, and late last year also went down. But besides that, we're still doing pretty good. Financials, this is where it gets concerning, is because they got a lot of debt. Let's just say that. So let's go over here, looking at total assets, right? We're looking at $375 billion, right? That's a lot. Long-term debt. You're looking at $132 billion. But the company is worth what? I think it was $160 billion. That's the market cap. Total liabilities, $286 billion. and you're looking at the shareholder equity, which is total assets minus total liabilities, you're looking at 88 billion. So since 2014, it's been going up and going in the right direction, which is good, of course. But we want to look at the financials, right? What is going on with Verizon? Why is the stock declining? And second best question is it a good deal, right? We're looking at revenue for the annual. This is the income statement. Revenue 133 billion, gross profit of 77 billion, right? And they're not putting any money into research and development. They're putting some in SG&A. Operating income of 32 billion, pre-tax income of 29 billion, income after tax of 22 billion, and that's no other income. So 22 billion, that is their net income. So pretty dang good. From 133 to 22, that's a pretty good margin. And you're looking at basic EPS per year, earnings per share of $5.32. We could actually look into what SG&A is. The sum of all selling, general, and administrative expenses. So basically operating expenses. Okay, I wasn't too sure about that. Okay, so besides that, guys, we're going to look at the balance sheet because the debt is what is concerning here. So they made $22 billion in net income. Okay, you gotta keep that in mind. So balance sheet, we're looking at assets of 366 billion, total liabilities 283. We saw shareholder equity is 83 billion. Their current assets is 36 billion. Okay, and that's all this: cash on hand, receivables, what is owed to them, inventory, and prepaid expenses. So they have 36 billion in current assets. Current liabilities, which we see right here, is 47. So that's the scary part, is they don't necessarily have the money to cover their current liabilities. But you look in the past, they never have fully covered that, right? You can see here, 2017, 29 billion current assets and current liabilities of 33, 37, 34, 44, 37, 39, 54. So last year they did. Now they do not. You can see that cash on hand went down a ton, 20 billion. So that is what is concerning here, is they have not enough cash to cover the current liabilities, or not enough current assets to cover the current liabilities, and that is why the current ratio is under 1, right? You want a stock with a current ratio over 1. That means they could cover their debts, what they owe. So negative free cash flow per share, operating cash flow per share. Yeah, we might have to look into the cash flow statement and just see where it's going wrong. So net change in intangible assets, net change in property and equipment. So it seems like they sold some stuff. That is the 22 billion which we saw on the income statement. Appreciation is going to add to that. Okay, cash flow from operating activities 39 billion, nice. But then cash flow from investing activities, because apparently the value went down or they sold something, I just don't see it being added to cash, negative 67, and that's why we have a negative free cash flow of $19 billion. And of course, added on a $10 billion dividend, which has only grown because their dividend has grown, which is, good for the investor. Kind of scary though. So that's macro trends, right? We're going to look at the dividend history right here. Make sure we're safe in getting that dividend every single quarter. So 2012 was 50 cents a share. Now it's 65. It seems like they're going up a penny or so every year, except for 1 year where they jumped 2 pennies, and same right here as well. So it's usually a penny or 2 a year per quarter. So 4 to 8 cents increase per share per year, and that's only been going up over time, which is good to see. Okay, Now we're going to look at FinViz, right? What give us some more insight to these ratios that we're looking at. So market cap 161 billion, sales of 135, income of 19. I believe this is the trailing 12 months. So the macro trend showed us 22 billion. So this is like the current year, 19 billion. Okay. Forward PE of 7.5, current PE of 8.3. Very good, right? Very low. This is where the debt comes into questioning. Debt over equity is high, above 1, and current ratio below 1. Concern. Of course, they have that nice juicy dividend, $2.60 a year per share, down 31% below the high, up 10% above the low, which was 34. Yeah, so still at 38. Besides that, we want to look at the SEC filing, the latest quarter. And I found actually something pretty interesting down here where it showed here. Verizon. Okay, so in February 2020, the Verizon Board of Directors authorized a share buyback program to repurchase up to 100 million shares of the company's common stock. The program will terminate when the shares purchase reaches 100 million or a new share repurchase program superseding the current plan is authorized. Blah, 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 right? Verizon did not repurchase any shares of Verizon stock during the 3 months ended September 30th, 2022. At September 30th, 2022, the maximum number of shares that purchased, of course, is 100 million because they didn't buy any. So what does that tell us is that Verizon does not think their stock is undervalued, at least not as much as it could be in the future, which means the stock could keep going down, right? But this is also September 30th. So this is ending this day. That's September 30th, so $38. They could have totally purchased some stock at 35, 36, 34 even. But it says it did not within the last quarter, and they still have 100 million shares to buy. And in February 2020, so it seems to me like they did not buy any stock of their own company since February 2020, or else that number would be like, you're not going to issue 102 million, right? It's going to be 100 million just to make it look good. So it doesn't seem like anything like that has happened yet in terms of Verizon buying back their own stock. But yeah, of course, always looking at the quarterly reports and annual reports of any stock that you're looking into is very, very, very informational, right? So we're seeing here the 9 months ended September 30th, 2022. Decrease in cash equivalents, and restricted cash has gone down. Not as much as last year, although quite a bit, just because investing activities, they lost 23 billion. You can see here dollars and millions, and then there's a comma, so of course it has to be billions. And financing activities, which is down as well. So that financing activities could be due to the rates going up and down, and Americans generally not getting much money to live, right? So they're cutting back on paying for what they owe Verizon, or it could just be general other stores. But the churn rate, what we're seeing right here, is low, right? If there's a high churn rate, which means, of course, people switching, not staying with Verizon, and that'd be concerning. But 1 to 1.5% is pretty low. We're seeing an increase as well from 7,600 or $7 billion in millions, right, to now 7.8, which is good. And this is operating revenues and selected operating statistics, medium and small businesses, global enterprises. So this is more business to business, right? And it talks cost of services. Expenses have gone up a ton. So it is kind of concerning. Definitely the cash is something to watch, in the debt. Besides that, Verizon, I would say not a bad pick. At least dabble some shares right now and see where the price goes to buy some more. It'll be a very good sign once Verizon starts buying back its own stock. Until then, dabble, collect that quarterly dividend, And yeah, guys, let me know what you think. Verizon's been I've been watching it for a little bit now. It's getting pretty attractive price at $38, especially a lot more than 50, and with that nice 6.8% something dividend yield. That's very nice as well. So let me know what you guys think. Thank you for watching.